Consumer resilience remained strong in November, with the latest Bank of America data showing a 0.6% year-over-year increase in household spending, and around Thanksgiving, a 6.1% rise in holiday purchases compared to a year ago. Joining us right now is Liz Everett Krisberg. She's the head of the Bank of America Institute. And Liz, these numbers look really strong. Can you offer a little insight as to what's happening here?
Sure. And you know, as we look at the data, we are not seeing any signs of this consumer resilience waning in any way. Some of the data is a little softer. It's cooling a bit. But in general, we continue to see tailwinds.
Cooling meaning it's not growing at quite the same pace. But
Exactly.
It's still growing.
Cooling, but not growing at the same, but still growing, still growing. And that's looking at spending, it's looking at wages, it's looking really across the board at everything. So the consumer still is in good shape.
We talk about things this holiday season, like the calendar shift, with Thanksgiving being later, with there being fewer days from Thanksgiving to Christmas, and with inflation numbers. If you add all of those things up, does it still look like a really strong consumer? Can you seasonally adjust it?
So here's one of the things you looked at, and one thing you forgot about the wonkiness was we also had an extra weekend day in November this year relative to last year.
So I didn't even know that.
So the wonkiness in the calendar, I feel like we've been talking about it every month since really Labor Day. So one of the things we looked at was we looked at the last 3 months, we seasonally adjusted, and then what we see from an annualized spending growth rate in our card data is up 2.3%. So
it's pretty strong.
It's still something. It's still definitely strong. And I think one of the things that's interesting to look at, though, is the composition of that spending. And retail transactions are flat, but the spending is down. Why is that? Some of it is deflation in things like gas, but another component of it is consumer behavior change. So we are seeing consumers trading down to more value options. So they're spending less on the retail side. But where are they putting that money? Where are they going to use it? On the services side. So it continues to be a services story. We're seeing it in restaurants. We're seeing it in travel. I mean, you saw the TSA numbers as it related to airline travel in November. Those were high. If you look at the number of gas transactions, people were driving to Grandma's house too. And you got to remember, Taylor Swift, her Eras tour was still going on in November. In Toronto, Bank of America spending was up 50% in Toronto when she was there. So
You're
people
kidding
are still,
me.
No. And that is
overall,
Bank of America spending in Toronto during her tour days was up 50%. And we've been tracking this actually through the Eras tour in Europe. And Toronto was the highest, 10 percentage points higher than it had been in any of her tour stops in Europe.
And was that based on hotels and restaurant spending? Could you track it down?
It's Bank of America card spending per household in the city where she is. Yeah.
That's crazy.
Yes. Yeah. She's her own economy.
I mean, but that's overall everybody, and not just people who traveled there to see that.
Correct. Yes. Correct. Yeah.
That's...
But I think what that speaks to is, again, this shift into services. The American consumer still is focused on experiences, services, and that's what we're seeing in our data.
Okay, so if you had to look at the consumer's health and compare that to another time in history, for as long as you've been there at the Institute, for as long as you've been watching these things, what does it look like?
I think in order to really understand that, you have to look at the labor market, right? And you were talking to Steve about this earlier. Okay. When we look at wages coming in to deposit accounts, in November, it was still up for every income group, about 2%. Now, what's interesting there is that 2% is down for the lowest income households. For middle income households, it's flat at 2%. But there are still, again, it's still moving, as we talked about earlier. We are still seeing consumers getting more income coming in. That also being said, when we look at the what's gone on over the last, call it 5 years, lower income consumers, their income is up 26%, which is double what higher income consumers have moved up. But higher income consumers are still driving most of the spending.
Yeah, because lower income consumers use more and more of their salary, a much bigger percent of their salary just paying for the basics, and the basics have risen so much in terms of inflation.
And they're not participating in the market upside. They don't have those investments, which are also contributing and helping support the higher income consumer spending.
But overall, if you have a job, you are willing to continue spending.
That seems to be what they're doing, yeah. And spending more, the spending growth, again, if we look at the last 3 months, spending growth seasonally adjusted up 2.3%, wage growth up 2% in November. So that is starting to compress. Yeah. But if you look at deposit data, so how much money people have in their checking and savings accounts, it still is up at least 30% higher than it was before the pandemic. Seasonally adjusted, it's up, depends on lower, middle, higher income, but it's up between 8 and 20% higher. So there is still money in the account. People have it to spend, and they are.